Smart compound investing, building wealth with monthly contributions, and index funds. Informational purposes only, not financial advice. When it comes to long-term investing, consistency often beats timing. Contributing even a small amount each month can lead to powerful compounding returns over time, especially when you focus on broad market index funds and select ETFs that offer growth, diversification, or yield potential. Let's explore how monthly investing into individual stocks and index funds, such as SPY, along with KDPD, GARB, SSO, TQQQ, TMG, and others, can help build a solid long-term financial foundation. Chart with upwards trend emoji. Why monthly compound investing works. Investing the same amount each month, known as dollar cost averaging, reduces the risk of buying at market highs and helps you benefit from market dips. Over time, reinvested returns can snowball thanks to compound growth, where gains generate more gains. Left magnifying glass emoji. Review popular ETFs and stock options for long-term growth. SPY, S&P 500 ETF. SPY is the go-to index fund for passive investors. It tracks the S&P 500, offering broad exposure to the top US companies. While it won't deliver moonshot returns like individual stocks, its long-term performance and stability make it a strong anchor investment. Monthly investing into SPY can yield meaningful long-term growth with lower risk. KDPD, Crane Shares China Innovation ETF. KDPD targets disruptive innovation in China, including AI, cloud computing, and autonomous vehicles. It's higher risk and less diversified geographically than something like SPY, but offers growth exposure to emerging sectors in Asia. Best used as a small satellite holding rather than a core position. GARB, Invesco Taxable Municipal Bond ETF. For income-focused investors, GARB holds taxable municipal bonds with the goal of providing monthly interest income. This fund is more stable than equities and may be a good balance to riskier growth ETFs. It's suited for more conservative investors looking for steady cash flow and lower volatility. SSO, ProShares Ultra S&P 500. SSO aims to deliver 2x the daily returns of the S&P 500. This leverage means bigger gains, but also bigger losses. It's not ideal for beginners or those without a high risk tolerance. If used, it should be for short-term strategies or tightly monitored long-term plays. TQQQ, ProShares Ultra Pro QQQ. TQQQ seeks 3x the daily performance of the Nasdaq 100, making it a hypergrowth, tech-heavy play. While returns can be explosive in bull markets, the risks are extremely high. Long-term holding of leveraged ETFs requires deep research and risk control. Not for passive investors, but exciting for aggressive ones with proper allocation. TMG, Turner Medical Group ETF. Focused on the healthcare and medical technology sector, TMG offers exposure to a mix of biotechnology and healthcare innovation. It's ideal if you want targeted growth within a resilient sector that may perform well even during economic downturns. Repeat emoji. 3 more index fund options to explore if you're looking to diversify your portfolio further. Here are 3 well-regarded ETFs to consider. VTI, Vanguard Total Stock Market ETF, covers the entire US equity market, not just large caps. Great for wide diversification with a low expense ratio. QQQ, Invesco QQQ Trust tracks the Nasdaq 100, focused on tech leaders like Apple, Microsoft, and Nvidia. High growth potential with historical outperformance over the S&P 500. SCHD, Schwab US Dividend Equity ETF. A dividend-focused ETF investing in quality companies with consistent cash flows. Solid choice for investors seeking growth and income. Brain emoji. Key takeaways: start small. Even $25, $100 per month into SPY or VTI can add up significantly over 10 to 20 years. Diversify. Mix core holdings: SPY, VTI, SCHD, with satellite positions KDPD, TQQQ, TMG to balance risk and opportunity. Be consistent. The key to compounding is discipline. Automate monthly contributions and reinvest dividends. Understand risk. Leveraged ETFs like TQQQ and SSO are not for everyone. Use cautiously and consider speaking with a licensed advisor before investing. Pushpin emoji. Disclaimer: this article is for informational purposes only and should not be considered financial advice. Always do your own research or consult a financial professional before making investment decisions.